Hello everyone, Tim Harridge here. Thank you for stopping by. Welcome to the first monthly event. The monthly event is a webcast brought to you by REI Masterminds. In this event, every month we will cover market trends, a couple little subject matter experts, and a main presentation. This month I'm happy to be joined by Nima Dagbandin of Gerasi Law Firm. As always, when you're watching my videos, please do me a favor, hit the little like button down below and hit the share button, share it with your friends. It really helps me know that people are watching. And now, on with the show. Like I said earlier, this month we'll be covering the quick hits, market overview, finance and insurance updates, evictions and foreclosure talk with Nima Dagbandin of Gerasi Law. A couple quick hits, quick links here. TimHarridge.com. You'll find a lot of financing information. You'll find links to the insurance information. REIChoice.com. That's our insurance company. Let us give you a quote. I use the National Association of Realtors for my market data. Hopefully next month we'll have Rick Sharga be able to present for. And then, of course, there's Gerasi Law. We're going to dive straight into the market overview. So I've been looking at market trends, seeing what's going on. I've got a three-part kind of overview here. First, let's just talk about month supply, because I think we're in a supply and demand situation, if you will. So when you look at month supply, I mean, last year the market was on fire, steadily below 4 months, month after month after month. And then you see in May, it shoots way up to 4.5, which way up to 4.5, just so you know, 4.5 is still historically low when you look at averages, but it was high for the last 4 to 5 years. Now you see June, July, we're dropping back down. And one of the most interesting things that I look at, when you look regionally, is the sales prices of homes. The 0 to 100,000 market has virtually been wiped off the real estate charts. You'll see a little bit more in a little bit. But, I mean, when you look at this, the percent of sales below $500,000, you notice the 0 to 100,000 market's basically wiped out in the Northeast. When you look at sales distribution, you know, the Midwest is the only market where 50% of the sales are actually below 250,000. And that's just, it's basically eradicated an entire marketplace. And you look at the inventory shortage, you know, the West Coast, the million plus have dropped off. Otherwise, that's about the only category, the rest of the nation, that has had less than a 10% inventory change. And that's just the important thing. That's what's driving the supply and demand. There's just not enough supply. So even though the demand may be less than it was, it's actually driving prices up, which we'll cover in a minute. So market conditions, when you look at percentage of sales through July, first-time home buyers in 2020, which is the dark purple line, first-time home buyers, they gained market share. Investors gained a lot more market share, right? Go from 11 to 15%. Cash sales went down from 19 to 16%, and then distressed sales went down from 2 to 1%. So I think you've got a little bit of a run to safety with real estate investing. It looks like people are getting more debt. But also cash sales, there were a lot of people selling their house and paying cash for their new house. So I don't look at that as much. The investor sales number uptick during July just shows you that investors have some confidence, especially when you look year over year. Here's just a little look. I mean, the only thing lower than the 0 to 100K price band is the million plus price band. You see the largest swath of the market is the nationwide is the 250 to 500K at 41%. And then, you know, the next up is the 100 to 250K at 33%. And that's where I personally focus here in the DFW area. Just the existing home price just keeps going up because there's just less inventory to be offered. Now, here you can see some of the impacts of the coronavirus on the actual market when you start looking month by month in 2020. You know, so this is total sales percent change year over year. So March was a little above, and then you see April is more than a 15% decline year over year in total sales. And then you see May is a 25% decline. You see activity coming back in June, and then you see July was actually an increase in year over year, a lot larger increase than the previous July, but you have a kind of a pent up demand issue. So I'm not sure I would jump too far off the cliff on that one. And then you have median, but you notice that even through the virus, the number of sales was going down, but the median price was going up because there was less inventory on the market. People weren't selling their houses. And so what we saw was everything we had up for sale during the crisis, which I guess we're technically still in, actually went for above list. So prices are going up. The percent change slowed down a little, but you see July 2020, the percent change is a lot higher, almost double what it was in 2019. So when you look at financing and financing trends, this is, I'm not talking about homeowner financing. I'm talking about real estate investor financing, where you can get the property in your LLC name. I don't look a whole lot at Fannie Mae, Freddie Mac type stuff. It's been a decade since I've taken a loan like that. So a lot of lenders are now lending back to foreign nationals. That's just one of those things that I've been observing as I talk to lenders about their loan requirements. Looks like DSCRs are coming back down there during the crisis. The debt service coverage ratio, some of these lenders were saying 1.5, 1.4. A lot of them bumped it up to 1.25, 1.3. It's just a way to limit their exposure and make sure that the property's cash flow. I've seen a couple term sheets recently at 1.1. Fix and flip loans are kind of coming back down to the middle. I mean, the last 10 years, it's just been a race to the bottom in fix and flip lending. When I got in this business, you paid 9% at the bank and you paid 18% with the hard money lender. And now you pay 6% at the bank and you can get hard money for 8%. So on the fix and flip, I'm seeing some rates back in the 8s again. Before the crisis, there were some lenders that would do 7. I mean, there's a couple for premium customers, but mainly we're back in the 8s. In the long-term loans with a buy down, we've seen some quoted in the 4.95, and we're being told it could go down to 4.5 again here soon. And that's an interest rate. When I say buy down, typically I pay 3 to 4 points in closing cost in origination fees to buy the rate down, because you're going to keep it for 5 years anyway. And this is the math, right? You're going to keep it for 5 years because you've got a 4.321 prepayment penalty. You might as well pay a couple points extra origination, lower your rate. Typically, it increases your borrowing capacity enough to where you can borrow the points, so to speak. But after 3 years, I mean, you're in the money and you've more than broken even, and you have a better cash flow, which, this business is all about passive income anyway. Most lenders are still stuck at 70%, but we're seeing a couple that are going back up to 75%. And that's just on, yes, you can find the one-off that advertises 80%, but I'm talking about what we're actually seeing get originated in the marketplace, not what someone's putting on a flyer. General insurance observations, as you know, I own REI Choice Insurance, and we've been seeing a lot of renewal policies coming out. Our master policy renews in the coming months. General commentary, you're going to see rates up across the board anywhere from 3 to 7%. And I think it's just going to keep going up. With the wildfires, the hailstorms, with 95 hurricanes a month, I just feel like you're going to continue to see annual increases in insurance, specifically as natural disasters become a little bit more common. Our loss runs were horrible last year. We had a lot of investors that had fires or tornadoes that did not make our insurer happy, but at the end of the day, we renewed with Lloyd's of London and several other carriers, and they still want this investor business. I recommend you increase your coverages. Replacement cost. Okay, so look, today a sheet of OSB plywood is $25. It was $10 6 months ago. A number 2 yellow pine stud for a house is like $7 or $8 a piece. We have lumber shortages. The cost to rebuild your properties is going to be higher. I highly recommend you take a good hard look at the amount of coverage you have, because you may not be able to rebuild your property for the dollar amount you've insured it for. Especially some of you that I know still carry the insurance at the original value when you bought it because you owe less than that. It's one of those things I recommend you take a look. REI Choice, we came out with some new payment terms. Now you literally only pay for the days you need. Previously, you had to kind of, if you put it on your policy about the 5th of the month or the 10th of the month, you ended up having to pay for the whole month. But now we've got it set up where literally you only pay from the day you bind forward, and then to the day that you click cancel. You'll be charged on the number of active days. Then what happens is you end up getting a credit on your certificate when if you pay an extra day or two that you can use to apply to future payments, or you can get a refund after all your policies are current. So a couple new payment things. I recommend you shop early and shop often. You don't hear an insurance agent saying that much, but we're confident in our rates. We're confident in our coverage. We're confident in the quality of our insurance. So we recommend you shop us, shop everyone else. And we think there's a reason that $150 million worth of property trust us to insure their property, and we pay out claims like crazy. So verify your deductibles. A lot of investors don't understand that there's multiple different deductibles inside every insurance policy. There are percentage deductibles, there are flat fee deductibles, there are different deductibles for different types of damage. So take a look at it, make sure you verify that. All right, next up, we've got Nima Dogbandin. He's a partner with Garasi LLP. He's going to talk about the eviction ban, some foreclosure moratoriums, and provide general commentary on the things that are going on in the political scene. I hope you enjoy. All right, folks, I'm joined here by Nima Bagdanin with Garasi Law Firm. He's going to talk a little bit about legal opinions of the eviction ban by the CDC and the various foreclosure moratoriums floating throughout the U.S. right now. So, Nima, take it away.
No, I appreciate that. You and I were able to connect a little bit before this call, and this is really a time period that's just marked by government intervention, right? I mean, and I think that's the craziest thing that we're really experiencing right now is as business people, we always want to be able to make informed decisions based on all the information we have at that time. And we're generally assuming that there are rules of the road about how we can make our decisions, right? We kind of understand, a good example of it is the eviction process, right? Every state's got their own process laid out about how an eviction works, the timeline, the procedures, what is the due process necessary on both sides of the coin. And what you're really seeing that is just a byproduct of COVID is a government intervention in all of the rules of the road that we have, right? Eviction is just one area of this. But in reality, so were those lockdowns and the quarantines and everything that we've been going through is really you've taken all of the due process rights that I think we've kind of assumed and the rules of the road that we've all understood of how to play this game, and all of that's thrown out the window. And I think what's really interesting right now is that this is just the start of it. And I think what was really interesting with all of this, and I think it's probably good from a historical perspective just to understand what's happened in the past 6 months from a legislative perspective. So, right now, you're probably going to hear in the news a lot the CDC thing, and we'll talk about that for a second. What was the CDC eviction moratorium? What is that? How did that come about? What does it mean? But even before we jump into that, really what's happening is you had the CARES Act. So you had federal intervention in this space, and the CARES Act from an eviction standpoint said, hey, for certain types of properties, right? So these loans that are associated with government loans, FHA, these types of loan products, these types of of loans, we're not going to let any sort of foreclosure activity occur here. We're also not going to let evictions happen at these properties. So you had kind of a stated understanding of this affects a lot of people. This should keep most people in their homes, and it'll sunset towards the end of July, right? And I think everyone kind of assumed that that Congress would get back together, and they would, create CARES Act Part 2, right? And CARES Act Part 2, everyone was kind of wondering, well, what is that going to look like from an eviction perspective, foreclosure perspective? Is there another stimulus check? What is that secondary response going to look like? I think the bigger questions, the economic questions, are the ones that I think that we're all kind of really wondering how that's going to affect us, right? So the stimulus checks are gone. The supplemental income is kind of questionable whether that's going to occur from an unemployment perspective. How much of that buoyed rents? Because I think what was probably surprising is while you had these eviction moratoriums, you also had probably not historically high, but surprisingly high collection rates that really occurred during this time period as well, even though technically a lot of tenants probably could have gamed the system more than they were. But we had the government juice was flowing, right? We had PPP loans, and we had unemployment insurance, all kind of going to the same, really the end worker, right? Which is a really unique way of government stimulus. And then you've got obviously the Fed's intervention, keeping the purchasing market on fire, and refinances, and really kind of keeping cash moving in the real estate space. And so you've kind of had a really our industry was definitely disrupted initially, meaning real estate, but we also had probably one of the best deck of cards handed to us comparative to other industries related to this time period, because you had, the Fed policy in particular was very friendly towards our industry and really wanted to make sure that there was a free-flowing capital market system in the background. So that's all the way of background of, hey, there was clearly lots of government intervention before this, but because you had the sunset of what happened is basically kind of an expiration of the CARES Act at the end of July. Now you've got all the states looking into this and other government actors looking at this going, okay, well, we're not going to get some sort of congressional movement. So we really don't want a repeat of 2008, which is a bunch of homeowners thrown out of their home, right, with pitchforks coming out, right? And so I think that's the lesson that every person who's running for office is looking at, saying, well, I'm not going to let that happen on my watch. So then what, right? So so I think the probably the more interesting one, I'm in California, so I'll talk about the California issue and kind of what's happening there, but probably the more interesting one is the CDC. So what's really crazy, and I think probably the saddest state of our politics today, is that if you've actually been watching what's happening from an executive order perspective, is back in August, Trump issued an executive order, and his executive order said, I want the CDC and HUD to look into eviction moratoriums. And the rationale that was being used back then was, we believe that when people are evicted, it increases the homeless population, and COVID is worse in homeless population. So we believe that there's a negative health impact by increasing a homelessness situation. And therefore, I want these two agencies specifically to look at what an eviction moratorium was, which is very, from any general political observer, it's kind of a very weird rationale to use. And it really shows you kind of the extent of what an election season has in the background, right? So clearly you've got a political dynamic, and it'll be very interesting to see what happens after November, regardless of who gets elected, about what they end up doing, because you have kind of both sides pushing for the same thing right now, which is nobody's getting kicked out of their property right now, because we cannot have that on our hands. And so the actual CDC, so he issues this executive order saying, CDC, HUD, go look into this, which is interesting because, again, I had never read that story. It wasn't until reading the CDC actual ban on evictions and trying to understand, I think that we all kind of woke up on Monday going, wait, how does the CDC do this? Like, what are you talking about? Is this Dr. Fauci coming out and telling us what to do? Like, how did we get here? Can you tell me when did this guy become a real estate expert? Right? And so you have this really crazy moment, and I started reading through the CDC order and going, oh wait, like this was really going back to the executive order issued a month ago, and that's how we got here. And this isn't this was done as a health response, saying, oh well, we think this spreads COVID much faster, and that's how we got here, which is, again, crazy. I mean, the fact that we're here, the fact that rationale, no matter where you're on the political spectrum, is nonsense. I mean, this is the craziest rationale I've ever heard, and this is going to be a constitutional problem that will be fought immediately.
Well, I saw today that there's a landlord in Virginia that has finally stepped up and sued.
Yep.
And it was kind of funny what you said. I just did not even pay attention last weekend when this thing happened, because I had actually listened to the press conference. I think it was on a Sunday when Trump announced all his executive orders, and he said he was banning evictions. And I was just thinking, okay, it's the same thing as the FHA evictions, and they're going to let those people skip their payments. Okay, whatever. I don't have any FHA mortgages, so I don't care.
Right.
And then one of the mastermind members, Russ, he calls me on Monday of last week, I want to say. He said, there's your topic for this month's call. And I said, what? He goes, the eviction thing. I said, well, what do you mean? And so I went and read the order. And it all references some ECR, something, I don't know, one of those acts or something. Well, then I just read they justified 3 or 4 times in the order the paragraph that gave them the legal right to do it. And I went and looked that up, and it said it was measures when there's inadequate local control. And as a Texan, like that just really pisses me off, because how can you carte blanche say the entire nation, there's no city, county, or state that has no control over? I mean, that's a pretty sweeping claim. And it's like you said, no matter how you lean with regards to what you're going to do in November, it's, as a landlord, someone that, I think, the premise of the success of our business revolves around private property rights and
right.
The rule of law, right? You got to, I'll be a little political. You got a president saying the rule of law in his speeches, but then he just is breaking the law. It's like, okay, dude, this is not lining up for me. But
right.
Yeah, so I mean, I agree with you. I think there's some great constitutional challenges, but it won't be heard until this ban is over. And
that's right.
If Trump gets reelected, I'm sure he'll be impeached for it, and I'm sure the Senate won't do anything about it again.
Yep.
It's just insane to me. But so yeah, I mean, talk about it. I mean, I guess. What do landlords need to be prepared for, and what are their, if they get one of these? I've got it right here on my desk. I've got a form that a Dallas lawyer is making available free of charge as a PDF download, where you have to attest to all these things. Say I got one of these in the mail or email in the next couple weeks. What type of response is the landlord required under the law? I guess I don't even know if there's a law to come up with.
Yeah, and I'll do a quick screen share for you as well here on this one, because I've got, we did and feel free to forward this after the call here. We did a little write up on the details of what's actually happening in the CDC action, as well as the California action. And so so this is a really, I think the politics side of this is probably the most interesting, because when you read through the order, and we'll go through kind of that letter you just got, but this is where that we live in a messed up system right now. So this order, here's some of the really crazy things about this, because when you read, so for example, California and other states, they have these versions of eviction moratorium and oftentimes foreclosure moratoriums or mandatory forbearances or these other kind of interesting things. And more often than not, they are I would say, whether they're smart or not smart, but they're thought through, right? There are these considerations. So I'll give you an example. Is usually when they're talking about mandatory forbearances, most state legislatures will look at this issue and say, look, if you have a borrower who's got a clear income hardship, and they demonstrate this through bank statements, you as a lender should give them a mandatory forbearance. You should give it to them for, a 3-month period, 6-month period, something like that. And the best thing to do is just extend out the loan for the similar time period, right? Basically, let's hit the pause button on this transaction. Let's let this person come out of the situation. We all think it's temporary. Add it to the back end. You're never, this person doesn't owe this massive lump sum. Waive default interest and penalties or whatever during the time period. Just, the true pause reset button, that kind of thing, right? And I think that's probably, we can have arguments back and forth all day about the due process side and all that kind of stuff, but that's, we're in a crazy world. So that's probably the fair solution in all of these things. When you read the CDC ban, this is hilarious. This is where it's an election play. It goes, oh, by the way, so if you get this notice, the thing you're just talking about, you can't evict this person, but you can, your lease is 100% intact, meaning you can still charge any sort of default payments, you can charge late fees, you can tack up whatever you need to in the background. Oh, and when this thing expires on December 31st, everything's due on January 1. They're like, which we all know is impossible, right? Like, this tenant's not going to suddenly be like, oh, here's your giant check with penalties, right? So this is the ultimate, I'm going to kick this can past the election, right? That's all I'm going to do here. And this has nothing to do with government policy, with anything that is rational. It is purely, like, we're going to just do a government can kick for 3 months because we can, and we think it'll get better votes. And that's what this is. And so, to your point, so there is some formality, right? So basically what happens is that if you try to evict a tenant and they come up with this declaration, which is probably the form you just read, so the tenant must attest to the following, right? There's 7 points here. I don't make over $100,000 in income. I'm unable to make my rent. And they don't have to provide any proof of any of this, mind you. This is just, they have to say that this is true, right? Which is my favorite standard. I want to call, you and I should call our the finance company for our cars and our banks. Like, hey man, I just want to let you know, I don't feel like paying this month, but I promise you it's true, all right? Right. You trust me, right? I mean, we should trust each other. So as long as they say the magical words, and these are the magical words that they have to say, as long as they say the magical words, and this is residential property, you've got to oblige. I mean, this is the craziest part of this and the fact that we are, what made me really sad is I remember reading in the news a little bit last week, about, oh, Trump said this about soldiers or whatever, all these, what I call the Trump tweet stuff, right? Which is fine and well, whatever. People can talk about that all they want. This just literally reshaped being a landlord in the entire country. And no one's talking about it. No one's having this debate, right? It's you and your Facebook group.
It's unpopular because if you bring it up, you're just the dirty landlord that wants to kick people out of their home.
Right. And that's crazy, right? I mean, because the real sad fact to it, the vast majority of landlords in this country are small owners, right? They own somewhere between 3 to 5 properties at most, right?
96% own less than 5.
Right. And so, and the vast majority are going to be mortgaged. They still owe their landlord, and there is no relief for them here, right? So I hope, effectively is what sort of cash reserves do you have sitting around? So hopefully you stored a big old rainy day fund because the government basically said, you can't do anything about this, right? You're going to just have to sit there and take it and deal with and hope that your lenders are going to play ball with you and offer you something during this meantime if you're not able to pay them, right? And that's really the shame of all of this is that and worse yet too is now you've got these layered issues as well, which is the way that this law is written. It says this is a national moratorium. But if your state's law is worse than this and it's more stringent, your state law still gets to apply. We're not there to rock that boat, right? But effectively, here's a floor that's going to be nationwide, right? And so, yeah, unfortunately, those are the magic words. That attorney, assuredly, he just went up the bill, copied the magic words, said, hey, feel free to take this form, send it to your landlord. And the crazy part is that if you're a landlord, you've got to comply with this. And I'll scroll down for a second to talk about, I'm sure the next question, what if I don't, right? I mean, what is going on here? And they've now empowered the United States Department of Justice to prosecute these claims, right? And the violations range, I kid you not, from $100,000 to up to $500,000 for violations. I mean, what? That's where we're at. That's what's going on.
And when I founded B2R Finance, we created all these commercial mortgages that have default triggers based off of your cash flow. And it's like you said, the level of thought that went into something like this is next to non-existent. It's in essence politicians buying votes. I completely agree. And that's the reason both sides are frankly mute on this. In Texas, our two senators are both Republicans, and I've contacted both of their offices, simply asking them to defend our private property rights against the federal government, which is their job.
Right.
And it's crickets in the reply, right? And so, yeah, I mean, the unintended consequences of sweeping action like this and negating contract law is potentially real. I've been lucky so far. No one has taken advantage of this yet. But yeah, I mean, I'm with you. And it's funny. I read the order as well. And it is very clear that the tenant has to understand that it's under the penalties of perjury. And it's like, oh my gosh. I mean, like they care,
Right. Well, and that's the crazy thing too is, so I'm here in California, and as you know, California is a very active state from a legislative perspective. And so, there was a series of bills. So we're the general counsel for an organization called American Association of Private Lenders.
Yeah.
And so we're always tracking all these mortgage lender bills across the country. And I'm, here in California, so obviously California is of high interest for me as well. And so we were watching these initial bills that were kind of making their way through. And there was two components to these bills. There was, which maybe is not a bad thing. There was a tenant protection and a landlord protection. Right. So basically, if you're a lender, you were the one that was going to get screwed in this whole thing. Right. That was kind of how this thing was constructed. But at least there was a similar, they at least were thoughtful enough saying, look, we're going to give these tenants some relief. And we know if we give the tenants some relief that the landlords are going to be struggling. So let's make sure that we protect the landlords as well. And the person that could probably brunt this cost the most is the lender. They're the ones that are in the best capital position to take this, right? Whether it's due process right or whatever, that was the rationale that they were using throughout this process. But they were creating these really interesting bills all the way through, which had this, the one thing that's really frustrating and it tells you we're in an election season is, I don't know, I feel like a rational person in these contexts would say, look, people should help people, right? And this is what I loved of what came out of COVID initially, right? When we're thinking back to March, April, we were advising the association about what is the policy that private lenders should have when they get a forbearance request, right? Because this is not anything we've ever seen before, right? And people are really going to suffer right now. There's going to be people that truly aren't going to get rents. They're going to really suffer. And so what should you do as a private lender? And should it be any different than your previous policies? And we recommended at the time, look, if someone can demonstrate a hardship, they can give you a bank statement showing that they're suffering a rental loss. Yeah, like meet them halfway. It's the right thing to do right now. Meet them in this season, right? And I think, and nationally starts, I mean, lots of these, we talked about earlier about how the CARES Act covered these, government-sponsored loans, but all the major banks started playing ball too, right? Citi had their own policy. All these portfolio lenders said, look, we're going to do the same thing too. We're not legally obligated, but it's the right thing to do to meet the season, right? We're going to meet people halfway. And then when government intervention gets involved in here, they come up with the craziest standard of you don't need to provide proof. And I think that's the one thing that really irks me about all this. He just says, like, they've got to sign it under penalty of perjury. Okay.
Yeah.
Right? Like, that's garbage, right? They don't have to I mean, when as a society do we say, you know what, like, we can give people free rides without a scintilla of evidence? Like, when did that start? Like, when did that become acceptable in our society? I don't know. That's what really frustrates.
So speaking of that, I mean, you said they don't have to provide proof. as a landlord, are we allowed to ask for proof?
You know, it's interesting. As long as they provide the declaration, right? That's all they got to do. They say that, you know, they say the magic words to you and they declare those things, right? That's their obligation. So, you know, it would be interesting to see is you know, in the law, we have this concept where, you know, you like, let's say, for example, if you come to me with where Tim says he's the owner of a LLC that's going to buy property, but I know that his partner, Jim, also owns that LLC, there's this concept called actual knowledge, right? I have actual knowledge that Tim is not the sole person involved, and so I can't rely upon Tim saying that he's the only person that can sign on this entity because I have actual knowledge otherwise. But like, apply it here for a second. Like, what if you actually know that you know, this tenant is very gainfully employed, and in fact, they make 150 grand a year. I mean, they talk about it openly with you. You know what job they have. Like, you can go on a website and figure out how much money they make.
Well, let me give you a better example because I want to hear your opinion of this. The attorney I was talking to this morning said this. One of the tenants that provided the form, on their application, they received Social Security income, both of them, both tenants. So their income literally could not have changed, but they still, you know, downloaded the little form and sent it in. So what can a landlord do in that type of situation?
You know, and that's the challenge, right? Is you've got to figure out for yourself in this context where, you know, what is what risk spectrum am I willing to take here? Because the way I would read the law is it doesn't matter whether it's true, right? As long as they've told this to you and they've signed it, that's their legal obligation. So your response as a landlord is say, you know what, I got 3 months of nonsense with this guy, and on January 1, I'm gonna, you know, I can't wait to send the sheriff on you on that day, right? And I think that's the dialogue that people, like if I were a landlord right now, that's probably the dialogue I'd have to say is, sure, I get it. There's a declaration. I'm not gonna even try to fight you on that point. I'm just letting you know is here's the other parts of that law that you probably don't understand. And let's just be very clear about what's gonna happen here. Is your lease, remember all those late charges, all those penalties, it's just gonna keep adding up. And all that's going to happen, so unless you're, you know, you may as well just go ahead and start looking for another place to rent on January 1, because it's all due and coming, right? And your credit and the ding on your credit, like that's coming too. There's nothing about that protection in this law either, right? So yes, you got some legal rights on your side. You don't have to pay me for 3 months if you don't want to. There's nothing I can do about that. If you say the magic words, I'm going to sit back and take it. But I can tell you is on December 31st, pack your bags, right? And good luck with this one. Right, because that's the way that's the only good thing about this law is that it very much is a kick the can, and there is no requirement to waive anything from a landlord perspective in terms of what's due to you during the time period.
So my question, and Buddy just asked it, you know, so here in DFW, he's got an eviction set for September 22nd, and so far it's going to be heard. I guess as long as you haven't gotten this form, evictions can continue, correct?
Correct. So the way that this works is it's designed to be almost like a defense to eviction, right? So you can still try to proceed with one, but if they come back to you and they declare, oh, by the way, I'm you know, I can't. The reason why I can't make payments is because for these reasons, right? That's effective. Oh, well, now I can't evict, right? So, and the other thing that's interesting too is the part of the law that it addresses is the failure to make payments. If there are other violations of the lease, right, there you can still very much proceed with an eviction on other grounds. It just can't be for the non-payment, so long as the non-payment is due to COVID-related hardships.
So I think that's an important differentiation that landlords must understand. It's that this moratorium or ban is specifically limited to non-payment of rent in the event they've made the attestations that are covered in the ban. These 7 points, I think you said it was.
Yeah, exactly. There's I'll pull up that slide again. I'll talk for the screen share here. Yeah, this is the declaration here.
And I would imagine that, I mean, now you said that legal precedent was called actual knowledge, I believe?
Yeah, exactly. So what if you know this is not true, right?
Yeah.
I've got actual knowledge that this is not true. that's the risk spectrum, right? You could, and I think you can make those arguments and say, look, you know, let's use the Social Security example. This person could not have received a reduction in their income because their income source is Social Security that has not been reduced during the time period, right? So, but the challenge you have with these situations, and this is why I would say, if I were in a, you know, if you were my client, I would say, well, I wouldn't really want to make these contests right now because I don't know whether they win or not. We have a very short window. We've got a 3-month window that this is going to survive in. So, you know, do I want to be the canary? Maybe Blackstone, or, you know, let someone else be the canary in the coal mine on this issue to fight this issue, because there's plenty of people going to fight this issue. But if I'm a small landlord, I think it's one of those times where from a prudent perspective, I would say is, if they sign these 7 things, you know, all right, bud, you got me. We'll see you on December 31.
So let's go through a hypothetical example that I think could play out and could be actually probably abused. Say I have a couple all bills paid rental units, and say I legitimately did not have the money to keep paying the utilities if I didn't receive rent. I mean, do I end up getting fined $500,000?
So there's nothing in here that says you know, so then that's the interesting ricochet, right? Like the problem you have with this bill, where I think this is the sloppiest of all of them, is that they don't care about the landlord in this bill, right? And the landlord has their own repercussions here. So what happens, you know, let's say you're in Texas, right? Texas is a very short foreclosure window. So in theory, what could happen in a situation like this is for a landlord that's cash strapped, that doesn't get their payments, their lender could come right in and wipe out and foreclose, right? I mean, there's nothing that stops that from happening in a situation like this. And there's no protection for that landlord. And that's going to produce an equally bad situation for the tenant shortly thereafter. And so, but again, this bill doesn't care about the landlord. That's not who it's trying to protect here.
Well, it's very, I think we're all in agreement. It's very one-sided. It's even you right now, you continue to reference it as a bill and as a law, but it's really just, it's really just an order.
I'm so used to it. Yeah.
It's an order. It's not a bill or a law.
It's not.
That's just, it's never seen anything about it. So let's just kind of flip the script here and talk about, I know you mentioned that you guys obviously do a lot of work for AAPL, the American Association of Private Lenders. And we've got a lot of people that do owner financing here on this call in Texas, Arkansas, and some California folks. Talk a little bit about, you know, not only what you're hearing is in effect, but could be in effect soon on the foreclosure side, but then also, you know, I'm very concerned about servicers, small servicers, property tax payments, insurance payments, and things like that. So why don't we just kind of segue into the kind of note holder type conversation?
Great question and commentary. So here's what's really interesting, particularly from a private lender perspective. The challenge we've always had as on the private lending side is that the government doesn't know we exist. And so and I'll give you a quick story on this one to really demonstrate the point. Last year, every year, American Association of Private Lenders has a national conference in Las Vegas. It's in November. And so last year was their 10th anniversary. And so they had Barney Frank come out and speak to everybody, right? And so this is going to be interesting. We kind of have the, you know, as you can imagine, most people were not particularly Barney Frank fans in the audience.
Right. It's borderline hostile crowd for sure.
Yeah, exactly, right. But you know, people were very deferential. But the most interesting thing that happened there was you could tell as Barney Frank was discussing, you know, he was giving kind of a history of Dodd-Frank kind of coming about and how it was good with all those. But the really interesting when he was talking to us is he didn't understand who we were at all. He kept the way he was talking to us. He kept referring to us as small banks, right? To him, that's what a private lender was. Right? Because there was only big banks and small banks. So a private lender is a small bank. He had no concept that we were not banks. And that has always been, you know, we do like a day on the Hill exercises, and I'm part of other organizations where we try to do a lot of legislative efforts. And so one of the things that we do in this is oftentimes kind of getting the blank stares back from a legislator when you're trying to explain what a private lender is, because they really have no idea. They may know of someone who's got a trust deed or something like that, but they don't understand that it's a true industry. And so the challenges you run into when and the way that happens now when you're dealing with legislation is that when they're passing legislation, they only understand the world of massive institutions. And so, and I'll give you an example. In the institutional financial world, servicers are very powerful, right? Servicers really are the decision makers more often than not. And in the private lending world, the servicer is really just a person taking orders from the private lender, right? Can I get a forbearance? I don't know. Let me go talk to the investor, right? But if you were to ask that same exact question to an institutional servicer, they would say, here are the 5 forbearance options available, right? And that's their program, right? So the way that works when you're looking at legislation is they assume that all mortgages are held by large financial institutions. And so, and not only are they held by large financial institutions, but they're also held by large financial institutions that have a ton of money and can sit on the sidelines. And so that's the way that legislation is written. And so when you're starting to, California was probably the best case example of this, where you had these requirements we had kind of 3 bills. We just passed a bill called AB 3088. There were 3 bills that came right before it that were nuts. I mean, it was like, for example, if you had a borrower on any 1 to 4 family property, it didn't matter whether it was an investment property, didn't matter whether it was a fix and flip, didn't matter who the lender was. If this collateral was 1 to 4 family, the borrower calls up and says, oh, I'm experiencing a hardship. And I think it was literally like a 1-line affidavit. I'm experiencing a COVID-related hardship. As long as they said the magical word, no proof, lender had a forbearance, right? And it was a minimum 6 months, automatic extension for a year, so long as when that 6-month window ran up, they requested another, right? That's how crazy this law was written initially. They did the same thing. There was a little bit more nuance when it dealt with multifamily properties. They said, hey, if you're a borrower on a multifamily property and you can provide evidence of hardship, then they're also obligated to provide a forbearance, right? So there was actually provide some proof, which is probably the right thing. So those are the versions. And then they also, in addition to having those, they also had a layer of, oh, by the way, we are killing foreclosure in the state of California. Like, I don't care whether you filed a notice of default, a notice of sale. I don't care if this is a default related to something that happened back in 2018. I don't care how far along you're at in the process. None of that matters. All foreclosure activity stops, and it stops for at least 6 months, right? And they had basically, and the reason why it's at least 6 months is they basically said, whenever Governor Newsom says that this emergency is over, 6 months after that, that's when we'll do it. All right, like whenever he waves his magic wand and says, it's completely this nonsense, right? And so, but that was how these bills were written, and they were like moving full speed ahead. I mean, it took every single mortgage association out there, and you have big mortgage, and you've got Mortgage Bankers Association, which every bank is a part of. I mean, you've had every association just kind of coming in and trying to deal with this. And the bill, and as these progressed, they got much more nuanced, much more realistic, and it was good. You started seeing the industry impact on these bills. They were still looking really scary as a mortgage lender, because most of them still had some sort of mandatory forbearance requirement, and a lot of them still had some sort of foreclosure moratorium. But what ended up passing in California is really good news, because basically it showed you that there is so much opposition, I think, from this due process standpoint, that even a completely democratically controlled state like California couldn't push it through. There was enough business Democrats and clearly a full opposition from the Republican side that said, like, this is too far, this is too much. And so what they ended up passing was a bill that basically said, look, you have to provide let's say, for example, you want to go foreclose on a property, and the borrower comes back and says, I want a forbearance, I'm having a hardship. A lender has the discretion to say no, right? And that was the nice thing from a private lender perspective is they didn't say anything about what were the standards, what did you need. They just said, look, if you're going to refuse to do a forbearance for your borrower, you have to say why, right? You have to give them the reasons why. And if there are reasons that are curable, like, so say, for example, is part of your process, if you're going to look at a forbearance, you got to give me bank statements, I need to pay for a title report update or whatever your conditions are to even process a forbearance. If they didn't meet those steps, you have to say, hey, by the way, like, if your forbearance is denied and it's denied on these grounds, and these grounds are curable. So as long as you come back and bring me this information, I'm happy to revisit this again. That's the law that they passed, which all things speaking was probably fair, right? Like that's not this huge, overwhelming burden, whatever, right? And so, and then they really took a look at these giant loan servicers that have institutional rule policies related to forbearances, for example. They said, look, same thing too is let's say, for example, the Fannie Mae covered loan. Look, if Fannie Mae has policies on these issues related to who qualifies, who doesn't, you have to communicate those policies to your borrowers, right? So definitely give them the reason why you're doing something, right? You don't have to do it. And the law was really kind of cutely written. It said, we really recommend you, I can't remember the exact one, but we really highly recommend you do this. We kindly ask you to provide forbearances, right, but there's no legal requirement to do it. So the good news is that's California, and that's, we're always on the forefront of trying to do crazy things. And so if that's the best we could come up with in California, it shows you that this is not a popular issue in any state, and that people are going to push back heavily on this. And so that's probably the biggest reason why it was surprising that the CDC thing was what it was like, if California couldn't even get this pushed through the way that we did, to see the federal government come in the way that it did in the situation is really surprising. But, step outside of California for a second. The only other state that I'm aware of that did really anything crazy is Oregon, where basically Oregon issued a foreclosure moratorium, even on commercial real estate, which is the first time I've ever seen people bring in commercial real estate in this mix. That's right. Always kind of been the hey, every man for himself type area. And they stopped it, which is, again, I don't know if, take politics aside, maybe that's the right thing, right? I mean, you have people that really got hammered and it wasn't their fault, right? I feel like that's the really interesting that happened here. A retail shopping center, half your tenants couldn't open up again. The government kind of put you in the position here. And so the government should probably do something to kind of try to help out that situation. So it's kicking the can for sure, but it's also a pretty well understood situation of how we got here, right? And I think those are the debates we should have as a society, right? What is the fair response when you had a third-party actor, being the government, that came in this time and really started acting, right? What is the fair response? What is the right relationship between a tenant and their landlord and their lender, right? Can we apply an equal fair regime all throughout to all these people? And can we have that dialogue about what is fair? What is the fair treatment of each person? And were they? And I think it kind of goes back to what you and I probably have been talking about. Is I think a rational person would say, look, is it fair, right? Meaning that can I see a clear line between what happened to you as something that's not your fault, right? This isn't you being over-levered. This wasn't you making dumb financial decisions. We had a government intervention which shut down our society, right? And that hurt a bunch of people in a variety of ways. And those people, we should probably make sure that we try to do the right thing by them, so long as that there's a realistic chance that they're going to come out of this okay on the back end, right? But if you're like JCPenney, sorry, man, let's have if you're going to create a government policy behind all this, the government policies probably should have been look, can this person provide you evidence that they faced a hardship? And can they provide evidence that the hardship will likely end? Right? Otherwise, we're just kicking a stupid can, and it makes no sense. There's no value in this conversation.
Yeah, I mean, and I think that's the most disturbing thing about, I've always said I wanted to be a landlord because, the three basic necessities in life, food, water, and shelter. And I don't know how to make water or make money off of water. And I don't want to be a farmer. Right. And so shelter always seemed like a recession proof way to provide for my family and to, have retirement income and things like that. And then I always even went a step farther and said, the beautiful thing is our government always finds a way, even in the Great never in my wildest dreams did I imagine that the government would find a way to shut off my income stream potentially and give me no protection or assistance like on the back end. You know what I mean? I mean, like that's the most
clear winners and losers. Clear winners and losers, right?
And it's that you had mentioned Barney Frank talking about big banks and small banks, right? And it's just a trend politically, socioeconomically that we're trending towards. It's like you're either an employee of a company or you're a big company. And the small businesses, the entrepreneurs, the middle class is kind of left out of policy discussions and laws, orders, acts, whatever you want to call this. And I think, you know, to get philosophical for a moment, it's because the middle class has shrunk so much, right? I mean, those of us that are landlords, those of us that are private lenders, you know, we only account for 10 to 15% of society. You know, the middle class in America is 10 to 15% of society. So if you want to get elected, right, you don't pander to us. You may drop us some hopes and dreams and cookies, but you know, you're either going for the 50% of Americans that you know, live paycheck to paycheck, or you're going for the large corporations that are going to contribute enough to your campaign to get you reelected. And you know, we're all kind of stuck in the middle. It's very interesting times. I did a webinar with Mark Sewer back in May, where he literally talked about the erosion of the rule of law and the erosion of contract law. And it continues even now to be concerning. So obviously you folks are tied in a bit on the lobbying side and a bit on the kind of ear to the ground about what's coming up. HEROES Act seems dead. And you know, even the stuff the Republicans have passed in the Senate just seems dead. Do you think that we're in we got 2 months basically till the election, and then you have you know, what's most likely going to be a lame duck Congress until January? Do you think we just continue to see these executive orders and virtual lawlessness? I mean, until this pandemic magically disappears, or we swear in a new Congress and president? I mean, what are you guys hearing? I mean, is there anything being worked on in the background that we don't know about?
You know, it's interesting. I think the consensus was that something along the lines of the HEROES Act was, you know, if this was, you know, 6 weeks ago, I think, you know, 99% odds something's going to pass, right? I mean, because, and that was really the amazing thing about CARES Act and the Fed's response. It was unprecedented, but it also, you know, the PPP thing in particular was probably one of the smartest government interventions, I think, in the speed in which it moved was really, we were faced with true catastrophe. And it went to the, you know, it was to be able to disperse cash in that way to really keep our entire system flowing well. It was like almost a testament of like, yeah, well, we spent a ton of money. Who knows what this is going to do long-term in our society, whether we like, there was a lot of, you know, we kicked that big can right there, right? But, you know, whatever you were on the political spectrum, there was something to like about that thing, right? And it really did kind of help everybody. And I think it was one of those moments of like, wow, like, you know, big government can be very effective at times. And so coming into this, I think it was really a testament of like, wow, this worked. And I almost feel like you could have probably just taken that and said, let's just extend a lot of this out for another few months here, right? Because this thing is lasting longer. We had to do, a lot of places had to re-lock down or whatever. As long as we're truly intervening here, let's just extend this slightly and tweak it up. It would have been easy. And I think politically speaking, like, who's going to fight you on this, right? You're serving every constituency. You know, I think it's the biggest surprise of all this was that nothing happened. I don't know if a lot of people predicted that this is where we would end up at. I think that was the politically risky move. more than anything. And then, you know, the good news is that they both walked away saying the other side sucks. And, you know, and so whatever camp you're in before, you're still in, right? So I think that's the interesting thing. So I doubt there's any sort of, that I doubt anything good is coming out of this for the next few months, right? I think you'll still see, the only good news I think with what happened with the CDC is it probably took some pressure off of the states to come up with their own crazy version of this, right? And I think the states' versions would have been much more challenging and much potentially more punitive. And so I think the good news is that it almost created a floor, and we at least said, hey, we know this pause button runs up on December 31st, and you know this is just a silly button for election purposes. So at least we have some certainty, and we can make some decisions based off of that. I can't imagine a world in which you're going to see a lot more of what you're seeing, for example, on the CDC side. I think they've solved the biggest problem, which is, hey, we're not going to see media coverage of all these poor people getting kicked out of their homes and thrown out. And that's the one thing they can't have happen. So anything that looks or smells like that in the next few months, that's, I think, when you'll see an intervention, is making sure that politically they have cover to get them through the election. And then afterwards, you know, that's the crystal ball, man. Who knows? You know, what happens after this election? I don't know. Although the funny thing is, if you think about it, is you know, wherever you sit on the political spectrum, this was the CDC ban. You know, it would have been done whoever was in office, right? Like, this was the ultimate political pandering move. Had nothing to do with principles, right? This was purely a by the vote play, and that's politics.
You know, and you wish, right, that there would be some sort of, I mean, if you're going to do something to intervene with evictions, it should be emergency funding for HUD and a streamlined housing assistance program application, right, for existing leases, not new leases, right? I mean, it's my same problem with the PPP. There was no qualifying criteria. Like, you know, I've done lending. You can look at a balance sheet and a P&L pretty quickly and tell if someone really does need money or not. And, you know, it's, you know, everyone I know took a PPP loan. And
oh yeah, free money. You're stupid if you didn't, right?
It is free money. It's free money, and which is, it's a shame. But at the same time, it's a lot better than this crazy CDC order that just says, hey, you don't have to honor your contract, you don't have to pay, no one can do anything about it. But we'll go ahead and let all the fees and penalties and interest accrue. We won't help you any. And then you've got a boulder-sized bullet that's going to fall on you January 1st.
Yep. And nobody's prepared for.
So we're getting near out of time. Why don't you tell us just a little bit about Grassi, what you guys do, and how people can contact you?
I appreciate that. Yeah. So, you know, we're a law firm that really focuses on the representation of private lenders throughout the country. We're based here in Orange County, California, but we represent clients all throughout the country. A lot of it is mortgage fund type business. So people will put together, you know, a bunch of investors will kind of pull together funds, and they'll lend primarily on, you know, fix and flips and rental and other investment properties nationwide. And so we provide them with all of the legal services tied to that. So some of it is, you know, corporate formation and private placement offerings and the corporate and securities formalities of this side of the business. And then I'm on the lending compliance side. So when people want to actually get the money out the door, you know, what are the restrictions you need to think about? Do you need to be licensed to make that kind of loan? You know, what's the default interest rate in your state? What are the late charge penalties? Basically the rules of the road for how to make a loan and to make sure that money comes back in the door. And then right now we're doing a lot of, you know, forbearances, modifications, all that kind of stuff. And so it's a lot of workouts, and loss mitigation is a big portion of what we're doing right now. And so that's kind of our law firm in a nutshell. I'm sure you'll have links up to my contact information or otherwise, but people can feel free to, you know, Google my name. I assure you there's no other Nima Dogbannon living out there.
Well, you know what, Nima? There's no other Tim Harrods either. So we're definitely unique in that. Well, hey, I appreciate your time. Thank you so much. Nima Bogdanan, with Grassi Law Firm.
I appreciate it. Thanks for the opportunity.
Thank you so much for taking the time to watch this video. Do me a favor, like I said, click like, click subscribe, click follow, click share, tag your friends in this. And remember, set your calendar, third Tuesday of every month, 7 p.m. Central, we'll be launching out these REI Masterminds monthly events. We'll see you soon. Thank you very much.